Greetings and welcome to JASN Industries' fourth quarter 2019 earnings conference call. At this time, all participants are in a listen-only mode. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. Please note this conference is being recorded. It is now my pleasure to turn the conference over to your host, Rachel Zapkowitz, Vice President, Investor Relations. Thank you. You may begin.
Good morning, and thank you for joining us today for the JASN Industries fourth quarter 2019 conference call to discuss our earnings results. If you have not received the slide presentation for today's call, you can access it on our investor relations website at investors.jasninc.com and follow the link to our events and presentations page. With me today is Brian Kobylinski, our Chief Executive Officer, and Chad Paris, our Chief Financial Officer. Before we begin this morning, please be advised that this call will involve forward-looking statements regarding the company and its businesses, as noted on slide 2 of today's presentation. The company's actual results could differ materially from any forward-looking statement due to several important factors described in the company's latest SEC filings. The company assumes no obligation to update any forward-looking statements made during this call. We will begin this morning with our CEO and Chairman, Brian Kobylinski. Kobe?
Thank you, Rachel, and thank those of you tuning in to JASN's fourth quarter earnings call. As expected, the challenging industrial demand environment we have been signaling for the past few quarters continued to suppress results, and the market news of the last week only adds uncertainty. We do not expect markets to do us any favors in the short term, so we remain focused on projects and activity that best position JASN and its two strong businesses, Osborne and Milsco. Our service, quality, and delivery performance remain at the highest levels in the company's history, and our commercial teams continue to enhance our already strong portfolio of innovative technical solutions. Solid operations and growing commercial effectiveness have improved our position with customers, earning us the opportunity to further capture share. We have been busy transforming our portfolio, most recently divesting Metalex during the fourth quarter, a move that significantly reduces the company's exposure to the highly cyclical rail market. Additionally, we remain active in the pursuit of logical tuck-in acquisitions for our core businesses. Subsequent to the quarter end, we acquired the Matchless Metal Polishing Company and lengthened Osborne's lead in the industrial polishing space. Turning to slide 4, as we reflect on the year, we encountered contracting demand in industrial and served markets that negatively impacted our results. We plan to alter the composition of our portfolio in 2019 and did just that, minimizing our exposure to cyclical end markets like automotive and rail. JASN today is a more focused company comprised of two industry-leading businesses, Osborne and Milsco. We are less cyclical than in the past. Our operations now perform at the top of our peer group, and our ability to innovate and provide customers value-added solutions is greatly extended. We continue to work to address our capital structure, and while we do not have additional information to provide relating to our strategic alternatives process on this call, we can say that we are progressing. We followed the completion of our Janesville divestiture in quarter 3 by selling Metalex as part of our comprehensive review, and our advisors are active working various avenues to enhance value for all of our constituents. I will come back on the line to discuss these topics and more, but first, Chad will cover our financial results. Chad?
Thank you, Kobe. Good morning, everyone. I'll start with a review of fourth quarter results, discuss results for both of our segments, and then provide an update on the balance sheet. Please note that the results of the Fiber Solutions segment and the Metalex business are both reported as discontinued operations for all periods presented. Discussion of JASN's consolidated results on today's call and in our earnings release and slides are for continuing operations unless otherwise indicated. Our continuing operations are comprised of our industrial segment and the Milsco seating business within the engineered components segment. Starting on slide 5, net sales of $76.4 million were 5.6% lower than prior year. Foreign currency negatively impacted sales by 1.1%, primarily due to a weaker euro as compared to the fourth quarter of last year, and the Schaffner acquisition within industrial had a positive 5.9% impact. Organic sales declined 10.4%, resulting from weak industrial markets in all regions, and significantly lower demand from OEM customers and engineered components. Overall, our businesses continue to be impacted by a slower industrial manufacturing environment. Operating loss of $7 million increased $7.9 million, primarily due to lower sales volumes, but was also impacted by several non-recurring items, including a $300,000 loss from the sale of real estate in the current year, compared with a $1.3 million gain from the sale of real estate in the prior year, $1.3 million higher integration and other restructuring costs related to Schaffner and Millscope facility consolidation, a $1 million impact from an insurance recovery gain in the fourth quarter of the prior year related to the supplier force majeure, and transaction-related expenses for divestitures, acquisitions, and the strategic alternatives process. Adjusted EBITDA was $2.6 million, or 3.4% of net sales, compared to $5.8 million, or 7.2% of net sales in the prior year. Adjusted EBITDA was impacted by lower sales volumes, unfavorable product mix, and wage and material inflation, which were partially offset by pricing actions and cost and workforce reductions in both businesses. Turning to slide 6, Industrial reported fourth quarter sales of $47.9 million, which were $700,000 higher than prior year, with an organic sales decline of 7.1%, a positive 10.5% impact from the Schaffner acquisition, and a negative 1.8% currency impact on sales. Both Europe and the Americas contributed to the organic sales decline in the quarter, with overall weak demand from industrial and distribution customers, and with demand headwinds in the Americas stronger than those in Europe. Fourth quarter adjusted EBITDA of $3.2 million, or 6.6% of net sales, decreased from $5.2 million, or 10.9% of net sales in the prior year. The EBITDA decline and margin compression were primarily driven by lower sales volumes and unfavorable product mix, partially offset by pricing and cost reduction actions. On slide 7, Engineered Components reported Q4 sales of $28.4 million, a decrease of $5.3 million. Organic sales declined 15.6% on lower overall volumes in all of our served end markets and product lines, as OEM seating customers reduced orders in response to declining market demand and continued to reduce channel inventory. Adjusted EBITDA in the quarter was $2.5 million, or 8.7% of net sales, compared to $3.4 million, or 10% of net sales in the prior year. Adjusted EBITDA margins were impacted by lower volumes and unfavorable product mix. JASN's free cash flow for the year and financial position at year-end are shown on slide 8. Operating cash flow for the year was negative $20.8 million, with free cash flow of negative $32.6 million, driven by lower adjusted EBITDA. Both operating and free cash flow were impacted by $4.5 million of transaction costs, primarily related to the Fiber Solutions and Metalex divestitures and the Schaffner acquisition, and $8.1 million of cash restructuring and integration costs related to cost reduction, facility consolidation, and Schaffner integration activities. An increase in working capital had a $6.9 million negative impact, including $3.7 million from lower accrued incentive compensation, higher inventory requirements as we execute facility consolidations, and lower payables. Note that these operating cash flow and free cash flow results include both continuing and discontinued operations cash flows for the period during the year in which we owned the divested businesses. On a year-over-year basis, the $48.6 million decrease in free cash flow was driven primarily by several factors, including a $22.8 million decrease in adjusted EBITDA from the discontinued operations, an $11.8 million decrease in adjusted EBITDA from continuing operations on lower sales results, a $13.1 million impact from changes in working capital, which were a source of cash in 2018 but were a use of cash in 2019 due to the items I previously noted, and $4.5 million of transaction costs related to the divestitures and the Schaffner acquisition. Our total liquidity was $102 million, comprised of $84.5 million of cash and cash equivalents and $17.5 million of available capacity on revolving lines of credit. Net debt to adjusted EBITDA increased to 12 times compared to 11 times in the third quarter, driven primarily by lower LTM adjusted EBITDA resulting from the lower sales volumes. As Kobe noted, in December we completed the divestiture of Metalex. The sale resulted in $4.8 million of net cash proceeds, net of cash divested, liabilities assumed by the buyer, and transaction costs. These proceeds were used in a $5 million voluntary prepayment of our first lien term loans prior to year-end. The sale transaction resulted in a taxable loss that partially offsets the taxable gain on the third quarter sale of Fiber Solutions. Following the two business sales and our 2019 results of operations, at year-end our net operating loss carry forward was $12.8 million. As discussed in prior quarters, we continue to intend to use the proceeds from the sale of Fiber Solutions for reinvestment in the businesses, including capital expenditures and potential acquisitions, as well as other permitted investments under the terms of our U.S. credit facility. As of year-end, $57 million of such proceeds remain. As Kobe discussed, subsequent to year-end, we completed the acquisition of Matchless, which we expect to utilize $5 million of the Fiber Solutions net proceeds. To the extent that we do not reinvest the proceeds, a mandatory prepayment of our first lien term loans will be required in the third quarter of 2020. Consistent with our practice since announcing the strategic alternatives process that remains ongoing, we will not be providing 2020 guidance at this time. Now I'll turn the call back to Kobe to provide an update on the businesses.
Thanks, Chad. Please turn to slide 9. My commentary relating to the markets will be relatively brief, as the demand environment presented by many vertical markets served by Osborne and Milsco remains under pressure. General industrial indicators like manufacturing PMI and industrial manufacturing indices signal contraction. The European region has been receding for well over a year, with Germany posting roughly 500 basis points lower performance than Europe overall due to its export nature and interconnectivity with China. For reference, one-third of JASN's revenue is derived in Europe, and nearly 25% of our total sales are Germany-specific. Rig counts, a proxy for activity in the oil and gas sector, are down roughly 25% year over year in the United States. We are seeing similar pullbacks from our oil and gas customers, and our team is adjusting by focusing heavily on MRO opportunities and competitive conversions. Automotive markets continue to decline and channel inventories remain at healthy levels. Our Osborne polishing business is faring better than this core market, however, due to diverse sources of revenue and intense commercial focus as part of our acquisition integration activity. Construction and heavy equipment manufacturers are forecasting declines in the range of 5 to 10%, directly impacting our Milsco business. Additionally, residential riding mower production is down in the mid-teens, as reported by the Outdoor Power Equipment Industry Association. Many of our customers are taking a wait-and-see approach to the spring season. Finally, while it is too early to predict the full impact of the coronavirus, JASN's current perspective is balanced. Osborne's China JV is feeling the effects of the China automotive slowdown, but overall, our supply chain has only pockets of direct China exposure, and where we do have links to the region, we maintain alternatives that can be substituted. Our primary concern relates to our customers, as they may encounter issues that further curtail build schedules or other activity. I guess we can sum up our served markets with one word: challenge. Fortunately, our team consists of fighters that relish challenges, and there are many reasons we continue to be energized. Slide 10 is the first example. Our Milsco team doesn't merely talk a good game as the leader in innovation and performance. We back it up with quality and delivery levels that lead our categories. Gone are the days of playing catch-up. The photo at the far left is one of numerous futuristic designs that we displayed at the Green Industry Expo last fall. These futuristic, Milsco-specific concepts opened the doors to virtually every turf care OEM and led to 6 new platform awards, including the example shown in the middle photo. Our strategic focus on ZTR and electric-powered mowers puts us in a solid position for the latter part of 2020 and into 2021 as these new platforms come online. Our opportunity funnel remains 3 times higher than in the past, and we are confident we will continue to capture more share in the current award season. The photo at the right is a small glimpse of our autonomous rideshare concept. We continue to invest in this incubator business and have dedicated staff and space to what we believe is a game-changing concept, not just for JASN, but for transportation itself. Slide 11 is a bit busy, but the images symbolize what our Osborne team has been building. 3 years ago, we began to reinvest a portion of our cost savings into commercial resources. Our sales and marketing efforts fall into one of the 5 buckets shown. First, everything begins with the end user. We focus on a few core verticals like heavy fabrication and shipbuilding, as these markets contain super users of our goods, users that provide insight into new product and solution improvements like the Tough Brush, ATV brush, and deburring tools shown at the bottom. These families of products all have been launched in the last 2 years, increasing the vitality of our offering and differentiating us from the competition. To access these end users, we established relationships with channel partners represented by the catalog cover on the right. Our brand is highlighted on the cover as well as inside the catalog, alongside industry leaders and best-in-class brand names. The cumulative effect of these efforts is an elevated brand position, one that Osborne now commands. Speaking of Osborne, slide 12 illustrates how we manage the complexity in a diverse global enterprise, as well as build multiple platforms for organic and inorganic growth. Our team is organized into 4 lines of business due to the technical nature of the solutions and varied channels required to serve our customers. Polishing is an example of one of these 4 lines. We believe we can grow by increasing our coverage, improving our portfolio, and taking a global approach. We also have proven that we can identify and execute tuck-in acquisitions at attractive valuations that strengthen our market position and our businesses. Our latest addition to the Osborne family is covered on the right-hand side of the slide. Matchless is the second tuck-in completed in the last 10 months and offers similar attributes to last year's Schaffner acquisition. By purchasing select assets, we add new customers, new served markets like medical, and a new chemical line extension to our Osborne portfolio. Matchless customers now can purchase more product from one source. Our combined suppliers will secure more business with one customer. It is a triple play of value. Slide 13 highlights our vision for polishing. One brand, one broad portfolio, global standards with local technical support, and core in 24 delivery. Our polishing team has done a lot in one short year. We added 2 businesses and are rebranding all as Osborne. We rationalized our product line using 80/20 tools and discipline. We maintained our aggregate customer base via increased intimacy and coverage. We bundled our purchasing spend. And by the end of the second quarter, we will have consolidated the pre-acquisition polishing footprint from 14 to 8 locations. Facility consolidation and cost reduction activity is not relegated to only Osborne polishing, as noted on slide 14. We are attacking our cost structure across the board given the current environment. We are looking to take $5 million worth of cost out of the business given what we see. This is not all incremental, but it is essential in returning our margins to the historically high levels we generated a year ago. We completed Millsco UK and Millsco Red Granite Quarryside, Osborne Jackson, Mississippi, and Osborne Northville, Michigan facility consolidations in the last 10 months. We will complete the Osborne Pittsburgh, Osborne Livonia, Michigan, and absorb the Matchless Chicago and Paris, Illinois operations by the end of the second quarter. Additionally, we are executing shared service and labor flexing initiatives across the enterprise. We continue our rigor. In closing, I want to assure each of our constituents that this team continues to enjoy the challenge. Our roster contains more talent, and our retention levels remain strong due to the opportunity for continued personal and professional growth presented by our many special projects. We are fortunate to have world-class customers that value what we have to offer, as well as a great team of people to draw inspiration from. We are driving JASN and its businesses to be the best in their markets, and our executive team is closely aligned with our advisors to complete our strategic alternatives process to directly address our capital structure. Like the rest of our team, I joined and remain at JASN because I enjoy challenges and relish the opportunity to turn a group of companies into leaders in their industry. We have and are doing that, transforming our operational performance, transforming our footprint, transforming our portfolio, and transforming our customer relationships. I thank all of our dedicated employees and valued customers for their continued support and look forward to the next stage of our journey.
This concludes our call this morning. In light of our ongoing strategic alternatives process, we will not be conducting a Q&A session today. Thank you for your interest in our company, and we look forward to updating you on our future progress when we report again.
This concludes today's conference. You may disconnect your lines at this time, and we thank you for your participation.